All right, well, right before the pandemic hit, P.F. Chang's started testing its to-go concept of smaller stores, some with a drive-through. That bet paid off big, and now the company has locations in 8 markets with 30 more locations slated to open through 2022. Well, joining me now is Damola. You gotta stay with me, Damola. It's a little wonky in the prompter. Adamolekun, I hope I got that right. The CEO of P.F. Chang's. Damola, thank you so much for joining this afternoon. Talk to me about this approach with the to-go concept and why, even before the pandemic started, you thought this was the right approach.
Yeah, no, happy to be here. Thanks for having me, Kristen. Yeah, we really focused on to-go before the pandemic as a real growth opportunity for the company. It's something that we saw as a core area to invest in. We're not psychics. We certainly didn't see COVID coming, but it did pay off to have that investment made and have that infrastructure built when COVID did happen. So we saw a step function, increase in our off-premise sales, both in the restaurants and in to-go. On the previous segment, I think you talked about Uber Eats and DoorDash. We saw a similar lift in our off-premise business. And so, we're retaining that and we're looking to continue to grow that business going forward.
So I did see, for instance, some of these drive-through lanes, like Chipotle, for instance. I know they added a drive-through lane there, Chipotle's, and it has proven extremely successful for them. Obviously it's a combination of people needing to be on the go, but also with COVID, it's obviously been a winning bet there as well. My question to you is, in terms of staffing these locations, you've got big growth plans, 30 locations by the end of 2022. What is the plan to staff them, knowing that it's really challenging for industries across the board to get labor on board these days?
Yeah, absolutely. It's a focus of ours, and it's the number one thing to solve for it as we expand. The nice thing for us is we do have 200 restaurants across the country, and we didn't change the food or the preparation. So our chefs, in our restaurants can work in a to-go and vice versa. It's the same kitchen. It's a little smaller, but the same formulas, the same recipes, the same quality food. So we're able to leverage the existing infrastructure with our restaurants and the recruiting pipeline that we have, and use that to staff to-goes as we look to expand throughout the country, which is a major benefit. But aside from that, it's kind of the normal, focus on, we want to be the best employer we can be, attract staff, the old-fashioned way by offering, a great situation for them in terms of pay, in terms of time off, in terms of being a thoughtful employer and making sure it's an attractive place and the most attractive place to work in our space.
Are you finding, Damola, that you need to offer incentives, higher wages, better benefits, sign-on bonuses to get people to join some of your locations?
Yeah, the markets, each market's a little different, and we, the market kind of sets things like wages, and we make sure we're competitive. I will say, our hourly workers make about $20 per hour on average throughout the country, which is much higher than most other restaurant brands. So we do offer very competitive wages, but it's things outside of money. People want to, be able to take some time off to spend with their family, vacations, things like that. So, for the first time in our 28-year history, we actually announced that we're going to close our restaurants on the 4th of July, just to give a day to our staff and our workers to spend a day with their family. It's a Sunday. We want them to have that. We want them to really enjoy the day, take a little time off for themselves. So, our teams are very excited about that. So it's things like that. It's paid certainly on one hand, but it's also, the other softer benefits that people look for, and making sure that, you're thoughtful about them and their lives, and making sure they can spend time with family and enjoy things outside of work as well.
Inflation is another challenge that we know companies across the board are facing, but the Federal Reserve has maintained, keeping the stock market generally in an okay mood, that this inflation is only going to be transitory, that we'll start to see prices, the rate that prices are increasing, come down over time within the next several years or so as the economy further reopens, some of this pent-up demand works its way out of the system, and then, according to the Fed Chair Jerome Powell last week, some of these supply bottlenecks and supply chain shortages actually take care of themselves over time. What is your view on inflation? Do you see that your input prices, your commodity costs, your food costs, for instance, are rising? And do you think that if they are rising, that will just be transitory?
Yeah, we're certainly seeing, levels of inflation in different segments of our business. Certainly some of the product input pricing, we're looking at chicken as an area that's increased, oil is another. And also with construction, things like lumber, steel have certainly, seen some increases in pricing. From our perspective, it's a lag between supply that really slowed down during the pandemic. Factories were closed, production stalled in a lot of parts of the economy, and then demand, which is now accelerating at a much faster clip than supply can catch up to. So we do view it as transitionary. We think it's temporary in nature for the most part. Some areas will continue to be inflated. You've got the chicken wars that are going on. You've got certainly I think labor will continue to be a bit higher going forward, but for the most part, we do view it as a short-term imbalance that is likely to be corrected in the next 6 to 9 months, I would say.
Damola, I wish we had more time with you. Thank you so much for joining. I hope the expansion goes well. That's Damola Adamolekun. He's the CEO of PF Chang's. Thanks again.